Welcome back to the Mobile Mailbox Money channel. We're here today in Magnum Cigar Lounge in North Phoenix. Just enjoying a stick here today. Sean, what are you smoking on?
Today I'm smoking on Rocky Patel.
We've got a Perdomo Maduro, nice and creamy, feeling good on a Friday. Just enjoying a stick here in North Phoenix off Union Hills and 17th Street, I think it is.
7th Street.
7th Street.
Yeah, 7th Street, yeah.
So here quite often, we started a cigar club, the Stickman Cigar Club. Get an official coin with your membership being approved with the Stickman. So shout out to the influential individuals that we frequent with.
Absolutely.
But today, we talk mobile mailbox money, we talk Silvercrest Opportunity Fund, we talk Win Mobile Homes, and providing investors a passive rate of return in a time when it's needed most, capitalizing in affordable housing. We're out in the market today, done really a couple transactions this morning. So I just wanted to sit down with Sean, kind of touch base a little bit and, see how things are going, kind of give you a little back office view of what we do on a day-to-day basis. So Sean, appreciate having you on the channel today.
Thank you. Thank you. Definitely love and glad I actually cannot lock you down. How many weeks has it been I'm trying to lock you down? I think I text you every single week. Hey, how about a cigar? How about a market update? Hey, about a cigar? But no. It's great. What I really want to talk about is, okay, it's 2026. We've been talking for a while, well, on camera. But so what are the big plans this year for Mobile Mailbox Money, Silvercrest Opportunity Fund, of course, Win Mobile Homes? What's the big vision this year?
This year we're focusing on pivoting into more family parks with our new relationships that own mobile home communities in the Arizona market. Because that's where the wide variety of buyers are looking for inventory in Mesa, Tempe, Phoenix, Glendale, Apache Junction. So that's kind of a little pivot we're doing in 2026. 55 and older still is a market at the end of the day. But for us to offer more wide variety of inventory and different age restriction or non-age restriction is of utmost importance in order to scale a business. Also with our branding in the market, I'd love to become the premier manufactured home resale specialist in the Valley, because there's not much conventional understanding of manufactured housing. You got the MLS, you got conventional financing for single family residents, but manufactured housing, there's really not a major brand out there that's championing the asset class. So for us, that's a big goal, and as our institutional relationships have expanded with Callian Properties, Kingsley Management, Roots, Treehouse Group, I think that we're starting to gain more velocity into that accord. So that's 2026. Hopefully we'll do like $5 million in business this year. We did 3.4 last year.
Boom, boom, boom.
So that's, just adding to the count.
Yep, absolutely. So I got a question. So this is for my Canadian investors. They've seen Win Mobile Homes website. They look at everything. It's unbelievable. They always ask, like, how do you guys keep your costs down? Because they see granted, they see sensitive appliances, they see, new cabinets. How do you guys keep your costs down on all these manufactured homes you guys buy?
Cost is of utmost importance to stay aware of at the end of the day. Ever since COVID, pricing's gone up for labor and material. For us, we're not subcontracting individuals at the end of the day. We hire 15 numbered in rehab and keep it all in-house, opposed to paying another GC or something of that nature that's taking their fee. So continuing to cultivate good labor, skilled labor, to make sure that we're doing things properly, but also getting in an affordable rate. Whereas, the regular layman is going to go hire another individual and they're going to take their fee in order to get the deal done. So, that's just one aspect in particular. We're still buying. We're buying at deeper discounts right now, in order to reduce our cost. We're a major buyer. We're Park pre-approved, and those come with their conveniences, and with convenience comes an additional discount.
Nice. So I got a question. Obviously, you're a buyer, a big buyer, and a lot of wholesalers try to send stuff your way. But how do you know a deal's a deal? Because I bring you a ton of deals, and some of them work, 12 work, some of them done. But how do you, since you're one of the largest buyer here in Maricopa County, how do you know what a deal looks like for people who don't know what a deal looks like?
You know, it's tough to decipher in manufactured housing because there's not like a long-standing comparable process like the MLS would be. You know, they don't report sales transactions and things of that nature. So over 8 years of doing business, you know, I kind of know pricing and what is a deal in a specific area and why it's a deal. You know, knowing the demand in that specific market is of utmost importance. Knowing what rents are in that market for an average 3-bed, 2-bath, single family property, you know, because that helps you reverse engineer what a potential exit would be at the end of the day and how viable it is for the end user borrower. Because if someone can buy and match or beat market rent in a manufactured home and it's turnkey for the same available square footage, beds and baths and quality, that's a successful program.
Right.
So backing it in from what average rents are in that area for the same square footage and beds and baths and livability, you know, that's kind of more data into how to decipher what an after rehab value would look like on a property. You know, it's easy to over rehab a home
right.
at the end of the day. These are manufactured housing units. You know, they're in the want for affordability in the market, and we've done some too much rehab on some properties before.
Right.
So, you know, taking that all into account, you know, knowing, like I said, what rents are, what average single family homes are going for as far as purchase prices, are all benchmarks in order to figure out what if it's a deal or not at the end of the day.
So what would you say if one of the investors came to you, hey, Alden, you're the big dog, sell me one of your manufactured homes. I'm gonna find my own crews. I'm gonna get a rehab. I'm gonna pay a lot of rent. I'm gonna find my own buyer. I'm gonna make them put 20 grand down. I'm gonna secure that note. What about this go to you and this that cuts you out, but why don't we just do that instead of
like get a wholesale deal almost?
Yeah.
You know,
is it easy to do? I think I know the answer to that.
I think it's easier on paper, you know, than what it's perceived to be. You know, there's a lot of hindrances in the asset class of personal property, manufactured housing. One in the main criteria is there's not readily available financing.
Right.
And to do a properly originated seller finance note exit, you know, knowing that in specifically, you know, really is the defining factor of a successful model and not. Because if you do end up seller financing that home, is that note sellable? You know, did they get underwritten? What processes did they hit in order to get underwritten? You know, was there a licensed mortgage officer that signed off on that loan? Because if you go into the note business, everyone wants a note discount on that position.
Right.
And if you can't exit your position, you've now limited your availability to go out and do another transaction. You buried money in a great cash flowing asset.
Yeah. But
how do you leverage or exit that position to go do it all over again? Because there's an abundance of opportunity here in the Arizona market. So, you know, easier said than done. It'd be great to team up with other individuals like that to throw a little gasoline on what they're trying to accomplish. You know, maybe we end up forming some form of JV or, you know, financed component where they exit their position. I viewed a property today, actually, of an individual that's flipping a home. I guess we've done this with him one time before where we got a cash price discount on the turnkey property and seller financed it to an approved buyer, pre-approved.
Nice.
So we're double closing to seller finance, getting a discount from the seller and increased price to the buyer, and the property still hits appraised value. Oof. So a risk mitigated transaction, we built in a $30,000 margin and we didn't even have to buy and flip the house. You know, for someone that's just fixing flipping a property, they want to exit at the end of the day and go into another home. So that's kind of a mutual beneficial situation. You know, I'll get probably a better discount from him on the next deal.
Right,
But you know, it's all got to work.
So this comes, of course, from Canadian investors. Okay, so, and this goes more to the mobile mailbox money side. So what if they buy a note from you, everything's going great, everyone's happy, we're getting their payments every month, and the manufactured home burns down?
So all the notes are required to have a sufficient insurance policy in order to cover the balance, and sometimes even replacement costs.
Okay.
So they have an insurance policy on every unit, and if it does go lapse as far as the insurance, we have a forced place insurance, so it's always insured. It's important to make sure it's insured. But trust but verify at the end of the day, in anything and everything. But that being said, that ensures that if that house does get blown up, or the wind blows it over, or the house burns down, that capital is reimbursed upon the distribution of an insurance claim.
Okay, and this is on the same lines. Again, this is from Canadian investors. They're not familiar with manufactured housing. What happens if that person dies? Then what happens to my note?
So, 9 times out of 10, they're on auto fund transfer services. So if there's money still in their account, they keep paying
right
at the end of the day until someone either inherits the property, or we have contact with a family member. But there is a lien on the position, and we can, if non-payment occurs, repossess that unit in as little as 40 days upon non-payment. So we take the property back, in other words, in 40 days, and get title, remarket it for sale, and possibly even resell or finance that home in the want for additional return on investment, maybe even additional profit, or reduction in potential capital being lost within that position.
Gotcha. Okay.
There's risk in investment at the end of the day. There's a 2% default rate that we tout strongly because of our double underwriting. So knowing that, if you do enough notes, that there's some that are bound to go non-performing. That's just the nature of the game. Stocks don't just go up at the end of the day. So being intelligent about the risk mitigation and having back office attorneys on retainer is of utmost importance. And anyone that buys a note from us 100% gets our back office staff at cost. So we're not going to just leave someone high and dry, out in the wind if a position does go non-performing, because we want additional business.
Yeah, absolutely.
You go buy a note from anyone on paperstack.com, they don't have that same offer.
Right. So question for you, and this is for investment side. So you see all these guys trying to buy single family homes, flip them, and try to make a margin. Well, you're offering double-digit returns. So why are more people in this game? Because the profits are right there. You don't got to search and comp and find it and undercut. And with a million people trying to buy the same house, why don't they just buy a note?
Yeah. So what was your question?
I guess why are you? We see a lot of guys who I buy house guys. We see a lot of guys trying to buy a house, fix it up, flip it, just to make a profit.
Yeah.
When they could just go buy a note and be hands off and have a double-digit return, why are those guys? Well, there's so many, especially here in Arizona, there's so many I buy house guys, or I want to buy your house guys, just to buy it, flip it, and try to make a profit in this market instead of just buying a note and just hands off.
Sweat equity is the way into the business at the end of the day. And if you don't have enough capital to make that acquisition of a note and cash flow at a double-digit interest rate, but you have time, going out and investing in yourself, it was probably a higher return at the end of the day. But for the people that have already done that and are tired of fixing flipping houses, have owned 10 single family rentals or whatever it may be, and are tired of maintenance, management, insurance, and taxes, this is a better alternative opposed to trying to buy a cash flowing rental, and you're making $200 a month after you pay the loan. To me, this is far superior of a program. The best investment one can make is in yourself at the end of the day. And until you max that out, at the available opportunities, that's maybe a better route in the beginning. But for the seasoned investors that don't want to swing a hammer or deal with contractors and people screwing them over all the time, fixing flipping properties is a business, and it's another job at the end of the day. For someone that earns high W-2 income, or really just wants to spend more time with their family and friends and travel and do what they want to do while making a smashing return, that's where really the rubber meets the road. And historically, we've been talking to a lot of sweat equity individuals, who are wanting the high risk, high return of an equity position in a fix and flip property. This is not that. It's far superior, because once you package that all up, you have to go find another asset to go fix and flip all over again, where this is paying, pro forma returns, opposed to having to replicate that and do all of it on your own and put it up in a note strategy or a rental strategy. You just buy a note with a bow on it, and take advantage of our 8 years swinging the hammer, at the end of the day. So it's just kind of my opinion, but that's what a lot of people we've talked to and the myriad of individuals, that have come across this strategy and why it may make sense for someone even watching here today.
Do you swing a hammer?
I've done my fair share of swinging hammers. I remember in 2019, we bought a home and there was a stupid amount of mold in the house. And it happened to be a $500 acquisition. And I was in jeans, dress shoes, and a dress shirt on the roof, spraying bleach across the entire house. I think we, I don't know how many gallons of bleach we remediated that mold. But, true boots on the ground, expertise in all areas. I was managing the contractor staff in the beginning.
Yeah, I remember that.
Picking up a couple homeless guys that we hired in the very beginning and driving them to Home Depot and, learning my ins and outs of plumbing and electrical and things of that nature. And now we're sitting here today, I'm president of a hedge fund and raised $15 million in private capital with double-digit interest-bearing contracts and a 2% default rate. The proof is in the pudding. So I don't swing a hammer anymore. My hands are soft. This is white-collar business. Sitting at a cigar lounge here at 2:08 on a Friday. But, kind of cool to see the progression and, why swinging the hammer is not so much of a shiny object anymore.
Yeah, you know how to give you a little jab. So obviously, we know you guys, with mobile homes, mobile box money, you guys are the big dogs in Maricopa County. You've got a great operation. So do you ever see yourself taking an operation like Texas to Florida, Oklahoma? Because you've got the system down like McDonald's in a certain sense. Do you think you're going to expand out to other markets, or is this going to be it?
So Nevada, potentially Florida. Florida has an insurance problem because of natural disaster risk. And we've even looked at getting our own insurance company. That's to the tune of $250,000, would allow us to insure our positions in a market that is deemed an opportunity, the Florida market, because of the demand and the density of manufactured homes in communities. But that whole insurance equation is a challenge. So, that's one market. And really what that boils down to is us hitching carts with another local operator that already has some bells and whistles, and ultimately helping them get to the next step and scale their business in a strategic partnership or joint venture, or even almost like a franchising component where we use our relationships and use their expertise in the local market, to execute. Boots on the ground is of utmost importance. And if you're not in that market, there's an element of loss, at the end of the day, if you're not paying attention. We have a lot of business going on in the Arizona market. We could double, triple, quadruple our business just here in our certain zip codes. So we're heavily focused on the local, transaction base. But, I would look at doing a JV or something of that nature with another local expert in the Nevada, possibly Texas, Florida, potentially, and maybe some other investor-friendly markets where the usury facilitates our yield that we've come to cultivate out in the market. Arizona is unless otherwise agreed upon. Florida's 18%, Nevada's unlimited. We sell our finance at 14 and 15%, so we have to find markets that fit that rate of return on our paper in a legal transaction.
Right.
Because to be above board is of utmost importance at all times, to make sure that we're scaling legally and professionally at the end of the day.
Gotcha. So I know you've got a ton of seller agents under you, so this might be you're part of the business, but who's your clientele? Like, who buys all these manufactured homes that you're selling? Who are they? Are they single moms? Are they just people with families? Are there
new families, retirees? I saw something the other day that the average age of a new homeowner is approaching like 45 or 48 years old. So there's a new day and age. People, where's the demand and the solution? It's in affordable housing, the demand. And where's the solution? It's in manufactured housing, because by the time a multifamily rental complex goes up with labor and material and the cost of the lot and development, it prices it out of what's deemed affordable really in any market in the nation. And there's a plethora of manufactured housing in most major markets with a black dot on it because people see it as trailer park trash.
Right.
At the end of the day, you can only put down so many ADUs. You can only build so many, studio style single family rentals. At the end of the day, that doesn't fix the problem. It's reestablishing an existing asset into the market and making it more of a palatable housing solution to new families and retirees, where they can match or beat market rent actually and buy for a primary home ownership solution. So that's kind of the new criteria, classic renters to homeowners situation.
That's my next question. So I guess, I show people our manufactured homes, like, oh my God, these look amazing. But how do you guys get people past, okay, I'm buying a manufactured home, which I wouldn't say it's embarrassing, but we've got to say it just a little bit. It's not a single family home, but it's a manufactured home. So how do you get all these people past that? I wouldn't say embarrassment, but okay, I'm going to buy this to have someplace to put my family in a certain sense.
It's long gone are the days of being embarrassed to own a manufactured home.
Okay.
Because the alternative is throwing $20,000 a year literally out the front door in rent. So is that really an ego situation, or a financially smart situation for that individual? Because if they wait 5-10 years to buy and save up for a single family property, over 5 years they paid $20,000 a year in rent. That's $100,000 that they literally lit on fire because someone thought that they would be embarrassed to be in a manufactured home. There's a new day and age in housing. Like it's mind blowing. If you want to see where the market's going, understand why institutions are buying mobile home parks, and that will open your eyes into where the solution is at the end of the day. So that's my soapbox.
Okay, so everybody thinks rates are going to get rate cuts. What if we get a ton of rate cuts? Is that going to hurt your business or help the business? What do you think it would happen if the Fed cut rates back to 3% again? Which I don't think is going to happen. But I mean, what do you think?
Single family pricing will increase, making it that much more unattainable for individuals. And for every rate cut, it's like $50 off a mortgage at the end of the day. So, that doesn't so much affect manufactured housing because there is no conventional financing on mobile homes. So, our rate will stay the same. We'll see more buyers in that accord of people being spurred out of interest because of lack of scarcity out in the market. They'll see things moving and people will start moving. At the end of the day, it's a slow market for a lot of people right now. And, we have 8-9 transactions in escrow right now. We had 3 approved today. I received a wire transfer of $121,000 from a note investor. We had, I think, 3 approvals for new homeowners out of the 8.
Awesome.
So, there's demand, there's a problem, and this is the solution.
That's great information. So 2026, we're in February. So do you guys have some big goals or initiatives, or how do you guys forecast or figure out, okay, I need to buy these mini homes or sell these mini homes?
I'd like to do 100 homes this year. That's probably $5 million in transactions, and 99% of those will go seller finance. So we'll likely absorb a lot of those into the fund.
Right.
Raising $10 million this year.
Who's the fund manager?
Currently seated before you.
That's all right.
So, Silvercrest Opportunity Fund is our 506c Reg D accredited investment fund, providing 10% returns for a 1-year term paid monthly, 12% returns for a 3-year term paid quarterly, or 14% return for a 5-year term paid monthly. And we can put $50,000 to $1 million and have it start generating interest in as little as 30 days. So absorbing those positions in the fund. We are a new corporate main sponsor of Arizona Real Estate Investors Association. That's second Monday of every month at Venue 8600 at 5 o'clock. So we'll be there, meeting people in person. There's also the Activate and Elevate conferences coming up here in the next couple days in Vegas. So hopefully we'll build more relationships, possibly do a couple deals, maybe a bunch of deals, and get some more content. We'll be out there with the cameras and lights and stuff, doing interviews. That's been super successful for us. But 2026 should be a big year with our new relationships, our new investors, that may even be watching here today, and our staff, 15 in rehab, 7 in sales, 5 in management. Is growing. We're looking for more sales agents that want an aggressive commission-based sales income where they can just market online, possibly team up with someone like Sean to have them show the property, or people that know money, get more relationships that people are wanting to leverage their Uncle Joe, who has $50 million
right,
and is looking for an 8 to 14% return. Those are all areas that we'll be expanding and actively pursuing here in 2026.
That's good information. Last question I have. Obviously, every year you go to so many different conferences. What conferences do you have on the docket for this year?
So we're keeping it local this year. So come and attend ASREA, Arizona Real Estate Investors Association, and Activate and Elevate. We have our weekly mastermind on Thursday at 1 o'clock Mountain Standard Time, Arizona time. That's free. It's a live deal flow market with the family bank. And would love for you to join there. Just, sign up at mobilemailboxmoney.com and join us. Talk with other investors, our investors. Talk with other people that don't know anything. Talk to people that are senior in the position. Wide variety of individuals that log in and view out of value and the want for transparency out in the market.
Okay. No, that's awesome. Like every time we talk, I find it so inspiring because you don't get to, if you're in real estate, people don't pull back the curtain like this. So you don't get to see what kind of deals are going on, how people are structuring deals. You got to pay for this education and you still don't know. It's like a lot of smoke and mirrors. So I appreciate it. I just want to have a stick with you. And this has been awesome. Once again,
we do all this stuff for free, and the want for transparency and trust, with the Jason's branding, with the largest real estate investment association in the nation, with Business Network International, with the largest chapter in Arizona. I've received upwards of $3 million in business from my association and membership in there over the past 3 years, and doing all this stuff online, really just to give away value at the end of the day. You can go spend $50,000 on an education platform, or you can join us at mobilemailboxmoney.com at the end of the day. So we're going to leave it at that. That was a 29-minute stream.
That was quick. That's fast.
Like, comment,
for hours.
Like, comment, follow, and subscribe. YouTube's got 955 videos online. I'm uploading every day, vlogging. One day I'll sit down with Warren Buffett and have an interview. You never know.
Yeah, definitely.
So appreciate y'all viewing today.
Take care. Buy notes.